If you have been following SPY closely or close enough, you might have seen that there's not been really a clear movement or a strong movement in the market. And that's because since we broke this level right here, let me draw a line on that. Since we broke this level right here to the upside or to the bull, we have never really had a clear movement. We have been consolidating up and down or sideways a little bit for quite a time now. So with that in mind, we have observed that there's 570 actually right around here, and a 574 right around up there has been the major resistance level. So the question here is, if this continues as it is, will this market break above that 574 level and rally toward the 580 for further bull trend? Or are we going to break below this orange line, which I just drew here, which would signalize, or which would give us that signal of a bear move a little bit? So the question, I mean, that question will dive a little further or deeper into it in a second here. All right. Again, we're looking at a 30-minute chart. I'm just going to go ahead and transform everything from a regular candle or traditional candle into a Heiken Ashi so that we can look at a clean data. And on my Heiken Ashi, you will see that there are multicolors. We'll come back to that in a second. Actually, let's go ahead and do that right away. In this multicolor, we trade section which are green. I mean, which are yellow. Yellow are the only candles that we trade. White is our entry signals. Orange is our bear entry or put entry, and then neutral green is just a positive affirmation of a beginning of the trend, which is it just means that it lacks volatility, it lacks momentum, it lacks all that good things that the market needs in order to rally to a specific direction. And then we have the neutral red as well, which same thing. It doesn't have volatility, it doesn't have momentum, it doesn't have volume at the same time. Okay, so that's what those candles mean. So we only trade one or two things. We trade the blue color of the candles. We trade the blue candles. Okay, and then the orange is our entry. Enter there, and then we trade the blue color, and then we exit when we see a neutral or a doji. All right, let's get back to analysis. In the analysis, we're looking at the 30-minute time frame. The 30-minute time frame really has a lot for us in store. And with that in mind, let's take a quick look where we are sitting and where things might be. Currently, we are sitting at let's if I reset this chart. Currently, we're sitting at right around 568, close enough to 569, around that level. And we have been really just consolidating around that. And the higher high of that time, it's around 570, let's say. That's primarily today. Okay, it's been around 570, and really a lot of consolidation. So with that current price action, the way things are going, we do see that there's a key resistance level still being that 570 level over there, and moving down to this 566 okay zone here. um, so that has just been a major resistance level of, I mean, 570 actually, let's say 570, 574. And then we do see that a major support level um, has been 565, 566, which really there's a chance that we could see this coming down to a little bit 561 over here, which is this zone here. If I go ahead and paint another picture over there. So if there's a pullback, and I draw this picture based on this September 17th, around September 18 and September 19 level here. Okay, if you look at that, you will see that there are those support level as well. So if there's any other pullback which is supposed to happen, or which might happen, we expect this 561 to be our key level. Okay, on a 30 minutes time frame. All right. Now, with that aside, let's go ahead and change our chart a little bit from that 30-minute chart time frame to, let's draw this. I mean, remove this line first, to a 4-hour chart. On a 4-hour chart, things might look a little bit different. On a 4-hour chart, we do see that we still have the possibility of uptrend because we are sitting above the 50 period moving average to begin with. And of course, because we are already above the 50 period moving average, that would also mean we are way above the 200 period moving average. Okay, if we change that to a 200 period moving average, you will see that yes, we are way above the 200 period moving average. And if we use that 200 period moving average as our trend line, you will see that we are still bearish. I mean, we're still bullish. Sorry, we are still bullish. We hugged the trend line over there. We had a liquidity run over there, and then finally we kind of hugged that over there. And because we are a little bit far away from the line right now, there's a possibility of coming to hug the line. We don't know when it will happen, but we just know that it should happen. Maybe somewhere there. Okay, is that might be where we will be hugging the line again the next. So we have that trend line, and then not just the trend line, but a 200 period moving average, which of course if it breaks below that, yes, that's a bear signal on that, which means we would be expecting that, actually not even expecting that, if we draw a support level, there are a few key support levels that we would draw here. First of all, to begin with, this would be our support level at around 540 something. Okay. And then next, we would draw that support level around 520, 521 level there. Okay. But of course, that's might not happen, considering how things are looking. That's a very long thing. But let's take a look at two scenarios here. The scenarios that we are looking at, we know for sure the 561 level, right around here. Okay, right around here has been which is this zone right here. We know for sure this level here is like the key support level. Okay, let's escape that. We know that. Oops, let's get out of this drawing mode for a moment here, um, which will draw the last one. All right, we know this has been our key level here. So then, because of this key level, let's paint that actually a different color, and then we'll take a look at two scenarios. The two scenarios here are: there is a bullish potential and there's a bearish potential. Let's take a look. If price holds, if price hold um, this level here, which I've painted orange, which is say the 561, and push higher above this 574, this could take us to a new high of 580, just like we saw earlier on a 30 minutes time frame. However, the problem is if if we break below this level here, okay, we could see this coming down further, meaning that there's a bear case or a bear scenario where we would drive from that 560 level or 561, 62 level. If we break below that zone, we could actually come a little farther down, and the farther down we go, that would bring us to about, maybe not necessarily that, but let's call it that level over there, because of that wick over there. Let's call it that, around that level over there. That's because that's like, um our that was a support level at one point. Okay, so we could see that pulling back and coming down to this 550, 50 something over here, and that could be what we're targeting if we break below that. So we wanna watch this close enough. And on a doji candle, as far as a doji candle is concerned, the current doji candle that we're looking at on this 4-hour chart has no wick at the top, meaning it's still positive. I mean, it's still bearish, but the size of the candle is small, meaning that there's less volume though. There's less volume. But let's put that aside. We'll get back to trading Aikanashi a little bit later. If you haven't watched it, I have videos about it. Just look around on some of my other contents. You will see how to trade Aikanashi candles. Okay. Let's take a look on a different time frame. Right now, on a 4-hour chart, we are still bullish on a 4-hour chart. But we're gonna go ahead and take a look at the daily chart. And on our daily chart, things might look a little bit different. Okay. First of all, to begin with, on a daily chart, we do see that again we are still above the 200 period moving average, like we we have talked about. Um, and then the key level of support and resistance still holds at around that 570 to 574. But in addition to that, actually, let me go ahead and put that over here for a moment. Okay. So we do see that on a daily chart there we have that doji. We have those doji, but more importantly, we have the blue candle, the candle that we trade normally, the exciting one. But also notice how we have our entry for a bear signal, for a no, for a bear, yeah, bear signal. We have that orange, and then we have the blue candle that we trade. So meaning it's beginning to look bearish from this point onward. And we do see that the size of the candle is bigger than the previous one. That means there is at least volume coming up as well. So we are beginning to be bearish on a daily chart on Heikin-Ashi. Even if we don't put this on Heikin-Ashi, we should still see that the candle still shows us or tells us that we have enough volume, we have enough pressure, we have enough volatility, we have enough momentum, and the trend direction is beginning to form clearly. Generally, we have that liquidity and enough interest. With this being blue, this just tells us that the all those factors are met and everything is bearish. Okay, although this candle itself by itself on a regular traditional candle, this would be a green candle, but the green candle has a lot of selling factors in it. That's the problem here, which makes it bearish. Okay, all right. With all that aside, we do see that we do see where our support and resistance level is, and we again the scenarios are still the same here. Uh, Scenarios are we break below this, we are in for a we're in for a bear run. We hold on this level, we could push a little higher to the 580 level. Okay, and if we go ahead and put this on a little farther higher time frame, like the weekly chart here, we will see that all these factors still hold and this resistance level remain the same. 50 period moving average could still be in place or playing a strong key factor here, um, which if we change that to a 50 period moving average, yes, um, 50 period moving average just tells us more stories as well. We're still bullish. Um, Anything else? Yeah. So for what I can tell you is that at the moment, we could hold and just wait and see how the market is going to play. But there are two scenarios here, like we said earlier. The scenarios are there is a bullish breakout scenario, and also there is a bearish rejection scenario. The bullish breakout scenario, let's go back to a shorter time frame, 45 minutes actually. Reset that, and then go ahead and remove every other drawings. So let's take a look at the bullish scenario or the bullish breakout scenario. The bullish breakout scenario is that if we go ahead and break further above this 574 level, if we break that, then that means we are in for a good bull run if we break that level. But because we haven't broken that level, there is a 50% chance of being bearish from where we are. All right. Um, the other scenario is the bearish rejection scenario. On the bearish rejection scenario, if we just consolidate on this 500 and let's say if we come and touch this 563 right here, okay, if we come and touch this and not break below it, it could tell us that we will be bearish for a little bit. So we are looking for a rejection from this level here, 553. Worst case scenario, 561, which of course 561 would be this support level right here, where we have multiple candles, I mean multiple wicks touching this line at the bottom. That is the actual support level from the previous well, previous week, or not previous week, yeah, something like previous week, previous month, from last month. So we're looking for a rejection from this line, and a rejection from here will tell us a lot. Okay, then a pullback towards yeah, we could even see a further drop down towards the 550. I mean, 50 something from here, which means like 552 level there. And 552, because I think we have, we have um, this zone here, which because of this zone, we do have that potential uh, uh, support and resistance level right around there. Okay. So with that in mind, we do have some key points here and some scenarios to look at. So first thing is, we break below this, we are in for another run, and we break above that, we are in for another run. As of now, we are in the sideways. We are in a sideways market, not really sideways market, but sideways scenario. So we're gonna be sideways for a little bit, and then once we're out of that sideways, that's when we will be able to have some of those trending days, like we had the trending days here. And it's clear, if you're looking at a daily chart. On a daily chart, we will have some of those trending days like we did here. For example, we have the trending day here, we have a trend, you know we have a trending day over there. We are looking for those trending days so that we can trade those trending days, and those are where we profit from. So with all that in mind, this analysis, if this analysis worked for you, feel free to build your knowledge out of it, or do a similar thing, or completely do something that you agree with. This is just my opinion. I'm not an advisor. It's not a guarantee that things I say will be correct. Where I'm wrong, just go ahead and leave a comment and ask questions if necessary, and we will just talk about things and discuss things. Okay. With that in mind, I want to wish you the best. And just if this helped you again, like, subscribe, and share the video with others, so that yeah, we're both learning and growing along with others, um, and not creating that bias environment. Okay. Um, for now, I want to wish you the best of your trading journey. Have a good time, and bye.